Welcome to the deep dive. Today, we're going to be tackling AmiBroker, specifically how to use its exploration feature to build like a full-blown trading platform.
Right.
You've given us, a stack of notes and transcripts, and
Yeah.
it looks like we're basically reverse engineering, like some kind of training session.
That's right. We're going to break it down.
Don't worry.
Yeah, we'll break it down.
Expert speaker is here
Even the complex stuff.
to help us decode all this.
So you can see the power of what we're building.
Even if AmiBroker isn't exactly, a household name for you yet.
Right.
So before we jump into the how-to,
Yeah.
I'm curious about something.
Sure.
These notes contrast backtesting with exploration.
Sure.
And they even mention this intriguing TAANT problem.
Right.
What's the story there, and why is exploration being presented as the better approach?
Well, it's all about bridging the gap between theory and reality.
Okay.
Backtesting is like practicing your golf swing on a simulator, right? It's helpful,
Yeah.
but it doesn't perfectly mimic a real game.
Right.
The TAANT problem highlights this, right?
Yeah.
Your backtest might show like a perfect entry point,
Yeah.
but in live trading,
Yeah.
that price, that volume, the whole scenario
Yeah.
might be gone by the time you react.
So it's like that split-second difference between
Yeah.
seeing the pitch and actually hitting the ball.
Exactly.
Timing is everything.
Timing is everything. Exploration is designed for live market scanning.
Okay.
So you're generating signals based on what's happening right now.
Right.
That makes it way more practical for an active trading system.
Okay, that makes sense.
Yeah.
We're adapting to the market as it's happening,
Right.
not relying on what worked in the past.
Exactly.
But hold on.
Yeah.
There's a note here saying exploration doesn't know anything about your existing portfolio.
Yeah.
No clue what stocks you own, your equity, past trades.
Right.
That sounds like a major.
So exploration is a very powerful scanner. Right. It goes through all the data and uses the criteria you set.
Limitation.
But you're right, it doesn't inherently manage your portfolio. So that's where we get creative.
Okay, creative how? I see these notes mention VBA Excel.
Yes.
Is that where we bridge the gap?
Precisely.
Okay.
Think of it like this. Exploration is the scout.
Okay.
It finds potential trading opportunities.
Uh-huh.
VBA Excel is the command center.
Right.
It tracks your positions.
Okay.
It tracks your equity and makes sure you're not buying duplicates or selling what you don't have.
So we're merging the strengths of both
Exactly.
to build something smarter than either one could be on its own.
Exactly.
I like it. Now let's unpack this platform step by step.
Okay.
First up is filtering and signal generation.
Right.
Sounds pretty self-explanatory,
Yeah,
but I bet there are some nuances here.
absolutely. Imagine you're panning for gold.
Okay.
You don't want to scoop up every pebble, just the shiny stuff.
Right.
Filtering ensures we're looking at the right data. We'll start with basic buy and sell conditions.
Oh.
Using MAS-CD,
Okay.
the moving average convergence divergence indicator.
MAS-CD, for anyone new to this, it's a way to measure momentum
Right.
by comparing two moving averages.
Yes.
So we're not just looking at if a stock is going up or down, but how strongly.
Exactly. Within AmiBroker's exploration, we define what's called a filter function.
Okay.
This applies your buy-sell conditions, which we'll base on the MAS-CD in this case,
Okay.
to generate trading signals.
Okay, so it's like setting up rules, right?
Yes,
If this happens with MAS-CD, then that's a signal.
exactly.
But the notes also emphasize focusing on specific watch lists.
Right.
Why is that so important?
It's about relevance.
Okay.
If you're only trading large-cap tech stocks,
Yeah.
you don't need exploration scanning penny stocks.
Right.
Your watch list helps your platform zero in
Okay.
on what matters to your strategy.
Makes sense. Now, there's this distinction between bar and date settings in exploration. I'm guessing this has to do with how often we're getting data.
You got it. Bar is for intraday data,
Okay.
where each bar represents a chunk of time within the trading day.
Okay.
Date is for, well, daily data.
Got it.
Choose the wrong one, and your analysis will be way off.
It's like trying to bake a cake using minutes instead of hours.
Exactly.
For the timer.
Yes.
Disaster. Okay, next up is checking for stock in portfolio and watch list.
Right.
Why is this step so crucial?
Imagine exploration gives you a buy signal for
Yeah.
a stock you already own a ton of,
Oh.
or a sell signal for something you don't even hold. This step prevents those awkward moments.
Okay, avoiding those
Right.
buy more of what I already have situations.
Yeah,
I see we're creating a watch list called Portfolio One. This
Yeah.
is distinct from the stocks watch list we discussed before, right?
Exactly.
Okay.
Stocks is your broader universe of potential trades.
Okay.
Portfolio 1 is what you actually own right now.
Right.
We use a function called iStock in Portfolio Watch List to check if a stock with a signal is already in this portfolio list.
So it's like having a checklist
Exactly.
to prevent redundant trades.
Precisely.
What happens if a stock in our portfolio doesn't trigger any buy or sell conditions?
That's where the hold signal comes in.
Okay.
It means keep holding this stock. There's no strong reason to buy or sell based on your strategy right now.
Okay, so hold is an active decision.
Yes.
Not just the absence of a signal.
It's a conscious decision.
This platform is getting smart. Now, this next section, addressing date and time discrepancies, has me a little worried.
Sure.
How much of a problem can timing really be?
It's trickier than you might think.
Okay.
Remember that TAANT issue?
Yeah.
Well, even with exploration,
Yeah.
we can run into trouble if the data we're using is stale.
Okay.
Imagine pulling data in the evening, but running exploration the next morning. You're acting on yesterday's information.
Whoa, that's like trying to navigate traffic using a map from last week.
Exactly.
I hadn't considered that delay.
Yeah.
The notes mention now and date time functions.
Right.
Are those our time travel tools?
They are. Now grabs the current system time,
Okay.
while bait time tells us the time of the data in the database by calculating the difference.
Okay.
We make sure we're only using recent data, not ancient history.
Okay, we're building in a safeguard against outdated information.
Exactly.
The notes also mention a function called isQuoteInRange.
Yes.
What does that one do?
It's our time bouncer.
Okay.
If the data's timestamp isn't within the time range we've set,
Yeah.
meaning it's too old,
Yeah.
it gets rejected.
Okay.
No outdated signals allowed.
We're being very picky about the freshness of our data, which I appreciate.
Yes.
So far, we've talked about filtering, generating signals, checking our portfolio. It's all coming together.
It is.
But how many shares do we actually buy when a signal pops up?
Right.
This is where it all becomes real.
That's our next challenge. And it's where position sizing comes in.
Okay.
We'll define a starting portfolio equity, let's say 1 million for this example.
Okay.
Then we'll calculate how many shares to buy.
Yeah.
Based on a percentage of that equity, maybe 5% to start.
So instead of buying a fixed number of shares,
Right.
we're scaling our trades
Yes.
based on our account size.
Based on your account size.
What if we wanted to be more aggressive
Right.
or play it safer?
Absolutely. If you're feeling bullish, bump it up.
Can we tweak that percentage?
If you want to be more cautious, dial it down.
Okay.
It's your strategy, your risk tolerance.
I love the flexibility.
Yes.
But what about those tiny trades? I'm
Yeah.
guessing we don't want to be buying like 3 shares of something, right?
You're on point.
Okay.
That's why we need a minimum trade size.
Okay.
It prevents impractical trades
Got it.
by setting a floor,
Right.
ensuring we're not making moves that barely impact our portfolio,
Right.
but could rack up transaction costs.
Okay, so we're thinking about both the big picture
Yes,
and the details.
we are.
Now, this section on advanced share sizing considerations
Okay.
looks especially intriguing. What's
Yeah.
the next level of sophistication we're adding?
We're going to incorporate average volume into our calculations.
Okay.
This means we're not just considering our equity, but also how actively the stock is being traded.
Okay, so a high volume stock means lots of buyers and sellers,
Right.
making it easier to get in and out of trades.
Exactly.
But why would we want the smaller value between our equity-based allocation
Right.
and a percentage of the average volume? Wouldn't we want to maximize
It's about avoiding something called slippage.
our potential gains?
That's the difference between the expected price of a trade and the actual price you get filled at.
Oh.
In a low-volume stock, trying to buy a large chunk can push the price up, costing you more.
So it's like we're trying to be stealthy traders,
Exactly.
not making waves that disrupt the market.
Exactly.
Makes sense.
We'll also tweak AmiBroker's lot size settings,
Okay.
which is the minimum number of shares you can trade,
Okay.
to match our desired quantities.
Right.
And we'll use the floor function
Okay.
to round down calculated share quantities to whole numbers and ensure they're compatible with lot size restrictions.
It's amazing how much detail goes into building a robust system.
It is.
We're covering all the bases, from signal generation to position sizing
Right.
to making sure our trades actually work in the real world.
Exactly.
But expert speaker, what's this I see about reading data from external files?
Right.
Why wouldn't we just put everything directly into the code?
That's where we bring in even more flexibility and customization.
Okay.
Instead of hard-coding values for things like total equity, allocation percentage, or minimum trade size, we'll store that info in external files.
Wait, so we can update our trading parameters without touching the code itself?
Exactly.
That sounds incredibly convenient.
It is. And this is where VBA Excel really shines.
Okay.
We can use it to read those files, manage our portfolio, even track performance metrics.
Wow.
It's like having a control panel for our trading platform.
So we're using exploration for the signals, VBA Excel for the brains of the operation.
Exactly.
And external files for easy adjustments.
Correct.
We're really building a multi-layered, adaptable system here.
We are.
I'm loving this. Now, what about handling multiple portfolios?
Right.
This is where things get really interesting, right?
Imagine managing different strategies or accounts with different risk profiles.
Yeah.
Instead of creating a separate exploration template for each, we can use a single master template and simply modify portfolio IDs.
Hold on. So we can run multiple strategies simultaneously using just one core setup.
Correct.
That sounds incredibly efficient, but how do we keep everything organized?
Don't worry, we'll stay organized.
Okay.
We'll use separate files and folders for each portfolio's data and settings. It's like having neatly labeled drawers for each trading approach.
So we're not just building a trading platform, we're building an organized system for managing multiple strategies.
Exactly.
I'm loving this. Expert speaker. Before we move on to the code itself in part 2, any key takeaways from this foundation we've laid?
What's fascinating to me is how we're blending the analytical power of AmiBroker with the flexibility of custom-built tools.
Right.
This isn't just about following a preset strategy. It's about empowering you to create and manage a system that reflects your trading goals.
I'm already feeling empowered.
Good.
But we're just getting started.
We are.
Listeners, stick with us for part 2.
Yes.
Where we'll turn all these concepts into real working code.
Exactly.
It's just beginning.
It is. Welcome back to the deep dive. Are you ready to roll up your sleeves and turn those AmiBroker concepts into working code? I'm practically bouncing in my seat. Let's get this trading platform built. Where do we even begin?
First, we need to define the heart of our trading strategy. The buy and sell conditions.
Okay.
These are the rules that determine when our platform should enter or exit a trade.
Right.
The training notes use the MAN-CD as an example, a popular indicator for measuring momentum.
MAN-CD, or moving average convergence divergence.
Right.
It's a way to spot potential shifts in a stock's price direction by comparing two moving averages.
Exactly.
We touched on it earlier.
You did.
But could you break it down a bit more for those who might not be familiar?
Sure. Imagine 2 cars on a highway.
Okay.
One representing a short-term average price, and the other a long-term average.
Got it.
When the short-term car speeds up and overtakes the long-term car, that can signal increasing momentum.
Okay.
A potential buy signal.
Right.
When the short-term car slows down and falls behind, it could mean momentum is waning, a possible sell signal.
That's a great analogy.
Yeah. I can practically see those cars racing.
Right.
So it looks like we're using the MAN-CD.
Yeah.
Along with some specific conditions for our buy and sell signals.
Yes.
For example,
right.
A buy signal isn't just when the MAN-CD is above 0.
Correct.
We're also looking for the MAN-CD to be above its signal line with the MAN-CD histogram above a certain level.
Exactly.
It's like we're looking for multiple confirmations.
You're exactly right. Those extra conditions help fine-tune your signals.
Okay.
We're not just blindly following the MAN-CD.
Right.
We're looking for specific scenarios that align with your trading style and risk tolerance.
Got it.
And remember our watch lists. We'll also make sure that exploration is only analyzing stocks within the stocks watch list.
Okay.
Our universe of potential trades.
Okay, so no point in scanning thousands of irrelevant stocks.
Right.
It's all about focusing on the opportunities that fit our criteria.
Exactly.
But expert speaker, this code snippet for the buy and sell conditions looks a bit intimidating. There's this ref function that I'm not familiar with. What's going on there?
Don't let it scare you.
Okay.
Ref is simply a way to look back in time.
Okay.
It lets us reference data from previous bars in our buy condition.
Yeah.
We're checking if the MACD line on the previous bar was below the signal line.
Okay.
This helps us identify a clear crossover to the upside.
Got it.
Where the MACD is gaining strength.
So it's not enough for the XED to simply be above the signal line?
Right.
We want to see that it crossed over recently,
Right.
showing a change in momentum.
Exactly.
And the cell condition uses ref in a similar way.
It does.
But we're looking for a downward crossover.
Right.
We're essentially confirming that the momentum is shifting in the opposite direction.
Exactly. Now, remember how we discussed layering in checks and safeguards
Right.
to make sure our platform behaves the way we want it to?
Yeah.
That's where our filter function comes in.
Okay, the filter.
Yeah.
This is where we combine our buy and sell conditions with those checks to ensure we're only considering the right stocks.
Exactly.
Duh.
So we're making sure a stock is in our broader stocks watch list,
Yeah.
but not already in our portfolio one watch list.
Right.
Meaning we don't already own it.
Got it.
And we're making sure the signal,
Yeah.
whether buy or sell,
Yeah.
aligns with our MISH-ED conditions.
Right.
You've got it.
Yeah.
And that iStock and portfolio watch list function we talked about earlier,
Right.
it's right there in the code, working its magic to prevent us from buying duplicates
Okay.
or selling what we don't have.
Right.
It's all about creating a system that thinks for itself,
Got it.
preventing those costly mistakes.
So much smarter than me manually checking each signal.
Exactly.
But what about those times when a stock in our portfolio doesn't trigger any buy or sell conditions?
That's when our platform gives us a hold signal.
Okay.
It means, based on your strategy, there's no compelling reason to buy or sell right now.
Right.
This isn't just inaction. It's a strategic decision.
Right.
It could mean we're waiting for a clearer trend to emerge, for a pullback to a better entry point,
Right.
or just more data to confirm our next move.
Okay, so hold is feeling much more dynamic than I initially thought.
It is.
It's like the platform is saying, patience, young grasshopper, will strike when the iron is hot.
I love that analogy. Now remember those time travel tools, now and daytime.
Right.
We need them again
Yeah.
to tackle potential discrepancies between the time we get data
Right.
and the time we run our analysis.
Right. We talk about how using outdated data is like driving with an old map.
Exactly.
Those functions help us stay in the present moment,
They do.
using only the freshest information.
Precisely.
I see. We're calculating the time difference
Yes.
between the data's timestamp and the current system time.
Right.
But why are we making adjustments based on the day of the week?
Excellent question. That's to account for those pesky weekends and holidays.
Oh, okay.
If we're using daily data and it's Monday morning, the latest data point might be from Friday's close.
Okay.
We don't want to make trading decisions based on prices that are 3 days old.
That makes perfect sense. If we don't adjust for the weekend, our analysis would be skewed.
It would.
It's like we're warping the time continuum
Yes.
to make sure we're using the most relevant information for each trading day.
Precisely.
And then we're using isQuote in range to reject any data
Right.
that falls outside our defined time window.
You're getting it. It's like having a quality control check for our data,
Okay.
ensuring that only the freshest, most relevant information is used for our signals.
Now, for the fun part, how does the platform figure out how many shares to buy
Right.
when a signal pops up?
Right.
This is where it all becomes real.
This is where our position sizing logic comes into play.
Okay.
We'll use the total equity variable,
Yeah.
which we set to 1 million in this example,
Okay.
to determine the number of shares to buy based on our chosen allocation percentage.
Okay, so instead of buying a fixed number of shares,
Right.
we're scaling our trades based on our account size.
You got it.
We mentioned using a 5% allocation per trade,
Right.
but we can adjust that based on our risk appetite.
Right. Absolutely. That percentage is completely customizable.
Okay.
Feeling bold, bump it up to 8% or even
Yeah.
10%.
Right.
Want to play it safe, dial it down to 3% or even lower.
Got it.
It's all about matching your strategy to your comfort level.
I'm really starting to appreciate the flexibility of this system. But what about those tiny trades
Right.
that barely make a dent in our portfolio?
Right.
We probably don't want to waste time and transaction fees on those, right?
You're on point.
Okay.
That's where our minimum trade size comes in.
Right.
We'll set a floor to prevent those insignificant trades.
Okay.
It's like saying, if a trade isn't going to move the needle, it's not worth the hassle.
Practical and efficient.
It is.
Now we're getting into advanced share sizing considerations.
Right.
This is where we take our calculations up a notch, right?
We are. We're going to factor in the average volume of the stock.
Okay.
This isn't just about our own equity.
Right.
It's about understanding the dynamics of the market itself.
Okay, so high volume means more buyers and sellers,
It does.
making it easier to enter and exit trades
Right.
without significantly affecting the price.
Yes.
We're essentially assessing liquidity.
We are.
But why would we choose the smaller value
Okay.
between our equity-based allocation
Right.
and a percentage of the average volume?
Right.
Wouldn't we want to maximize our position size?
It's about managing slippage.
Okay.
Remember, that's the difference between the expected price
Right.
and the price at which your trade actually executes.
Yeah.
In a low-volume stock, trying to buy a large number of shares can push the price up,
Right.
costing you more than you anticipated.
So it's like we're trying to be stealthy traders.
Exactly.
Slipping in and out of positions
Right.
without causing a ripple.
Without causing a ripple.
If we try to buy too much of a thinly traded stock,
Right.
we'll end up moving the market against ourselves.
Exactly.
Choosing the smaller value helps us avoid that.
Precisely. We're also going to tweak the lot size settings within AmiBroker.
Okay.
The lot size, if you recall,
Yeah.
is the minimum number of shares you can trade for that particular stock.
Right.
We need to make sure our calculations align with these restrictions.
So it's like making sure our trades are actually executable in the real world. The brokerage might say,
Yes.
you can't buy 123 shares, you have to buy in multiples of 100.
Exactly.
We're building those rules into our system.
We are. We'll use the floor function
Right.
to round down our calculated share quantity
Okay.
to the nearest whole number compatible with the lot size. This ensures our orders are processed smoothly.
I'm really starting to see the big picture here.
Great.
We're not just chasing signals.
Right.
We're building a system that's thoughtful, adaptable, and risk-aware. But, expert speaker, what's the deal with reading data from external files?
Okay.
Why wouldn't we just put all the numbers directly into the code?
That's where we unlock another level of flexibility.
Okay.
Instead of hard coding things like our total equity
Right.
allocation percentage or minimum trade size, we'll store that information in external files.
So if we want to change our trading parameters, we don't have to dig into the code itself.
Yeah,
we can just update those external files, and the platform will adjust on the fly.
Exactly.
That's incredibly convenient.
It is. And guess what? This is where VBA Excel becomes our best friend.
Okay.
It can read those external files, process the information, and dynamically update the platform settings.
Wow.
It's like having a control panel for our trading system.
So we're using exploration for the signals.
Right.
VBA Excel for the brains.
Exactly.
And external files for easy customization.
Right.
Like we've built a trading robot with an upgradable operating system.
Yes.
I love it. Now let's talk about handling multiple portfolios.
Okay.
This sounds like the ultimate way to level up our trading game.
Imagine managing different strategies,
Okay.
each with its own risk profile
Okay.
and target returns.
Yeah.
Instead of creating a separate exploration setup for each one, we can use one master template and simply modify portfolio IDs.
Wait a minute. So we can run multiple strategies at the same time?
You can.
All within one framework.
Correct.
That's mind-blowing.
It is.
But how do we keep everything organized? I'm picturing a chaotic jumble of data and settings.
No worries. We'll stay organized.
Okay.
We'll use separate files and folders to store data and settings for each portfolio.
Okay.
Think of it like having a dedicated binder for each strategy.
Right.
Everything is neatly compartmentalized.
Okay. So it's like having a multitasking trading brain.
Yes.
That can juggle different approaches without breaking a sweat. I am thoroughly impressed.
Expert speaker.
Any final words of wisdom before we dive into the grand finale in part 3?
What stands out to me is the sheer level of control and customization we're building into this platform.
Right.
This isn't about blindly following someone else's rules.
Right.
It's about empowering you to create and manage a system that aligns perfectly with your trading goals and risk tolerance.
I am feeling incredibly empowered already.
Good.
But I know there's still more to uncover.
There is.
Listeners, make sure you join us for part 3.
Right.
Where we'll see all these pieces come together.
Yes.
Into a powerful and adaptable trading platform.
Exactly.
The best is yet to come.
It is.
All right, expert speaker. We've laid the groundwork, we've explored the concepts, and now it's time to see the magic happen.
Right.
I'm ready to bring this AmiBroker trading platform to life.
Okay.
Let's see the code.
I'm with you. In this final part, we'll walk through the actual code step by step so you can see how all the pieces fit together to create a truly powerful trading system.
Let's dive into that first code block.
Okay.
It looks like we're setting up some initial variables and defining our trading universe.
Exactly. First, we set our lot size to 100.
Okay.
This is the minimum number of shares we're willing to trade.
Right.
You can adjust this based on your preferences
Uh-huh.
or your broker's requirements,
Okay.
as some brokers have different rules about the minimum number of shares you can buy or sell.
Right. We don't want our platform spitting out orders that can't be executed.
Exactly.
Next, we've got our starting equity,
Right.
which is set to 1 million in this example.
Correct.
And we're using a 3% allocation per trade,
Right.
meaning we're aiming to invest 3% of our total equity in each position.
Those are our core parameters.
Okay.
Now notice the line that defines portfolio ID as 1.
Okay.
This is where we start thinking about managing multiple portfolios.
Right.
If you had another portfolio with a different strategy,
Yeah.
you could simply change this ID to 2, 3, and so on.
Ah, so we're using this ID to keep our different strategies separate, but we're still using the same core code.
You got it.
That's so clever.
It's all about efficiency and scalability. Now let's focus on the Buykin and Sellkin variables.
Okay.
These are where we define our actual trading signals, and it looks like we're using the MACD indicator for this example.
Okay, so we're using the same MACD buy and sell conditions we discussed earlier.
We are.
We're looking for the MACD line to cross above or below its signal line,
Right.
combined with that histogram confirmation to add another layer of confidence to our signals.
Exactly.
But I'm seeing this ref function again.
Yeah.
What exactly is it doing here?
Ref allows us to peek into the past, so to speak.
Okay.
It lets us reference data from previous bars
Mm-hmm.
in our buy condition. For example,
Yeah.
we're checking if the MACD line of the previous bar was below the signal line.
Okay.
This helps us confirm that the MACD has actually crossed over to the upside,
Right.
indicating a potential shift in momentum.
So it's not enough for the MACD to just be above the signal line.
Correct.
We want to see that it recently made that upward move,
Right.
suggesting that the momentum is truly shifting,
Exactly.
and the sell condition is the mirror image,
It is.
looking for that recent downward crossover of the MACD line below the signal line.
You've got it. Now remember those checks and safeguards we discussed.
Right.
Those are implemented in the filter function.
Okay, the filter.
Yes.
This is where we layer in all those conditions
Exactly.
to ensure our platform is only considering the right trades.
Right.
So we're checking if the stock is in our stocks watch list,
Right.
our universe of potential trades,
Exactly.
but not already in our Portfolio 1 watch list,
Right.
meaning we don't already own it.
Right.
And of course, we're making sure the signal, whether it's a buy or sell,
Yes.
aligns with our MACD conditions.
You're following along beautifully. And there's our trusty iStock and portfolio watch list function, working behind the scenes to prevent us from accidentally buying duplicates
Yeah.
or selling stocks we don't have.
It's like having a built-in safety net to catch those potential slip-ups.
Exactly.
Much appreciated. But what about those times when a stock in our portfolio
Right.
doesn't trigger any buy or sell signals?
That's when our platform gives us a hold signal.
Okay.
It's essentially saying, based on your current strategy, there's no compelling reason to buy or sell this stock right now.
Right.
But it's not just about sitting on our hands.
Okay.
It's about making a conscious decision to maintain our position until the situation changes.
I'm starting to think of hold as a strategic pause,
Yes.
not just the absence of a signal.
It is.
It's like the platform is saying, let's be patient and wait for the right opportunity.
I like that.
Now let's revisit our time traveling tools now and daytime.
Okay.
They're back for another round.
They are. Remember, we want to make absolutely sure
Right.
that our signals are based on the most up-to-date data.
Right. We don't want to make decisions based on yesterday's news.
Exactly.
We're capturing the current system time with now
Right.
and comparing it to the timestamp of the data using date time.
You got it.
And then we're adjusting our time window based on the day of the week.
Exactly. We need to account for weekends and holidays.
Right.
Especially when we're working with daily data.
Yeah.
If it's Monday morning, the latest data point might be from Friday's close.
Okay.
And we don't want to use outdated information for our analysis.
It's like we're shifting our perspective in time,
Yes.
making sure we're always looking at the market
Right.
through the lens of the current trading day.
Right.
And then we're using isQuote in range to filter out any data that falls outside our desired time window,
Exactly.
just to be extra safe.
Now let's talk about the exciting part.
Okay,
Figuring out how many shares to buy when a signal pops up.
I'm ready.
This is where position sizing comes to life.
I see we're using our total equity variable,
Right.
which we set to 1 million, to calculate the number of shares to buy based on our chosen allocation percentage.
Exactly.
We're scaling our trades based on our account size. making sure we're not overexposed to any single position.
Right.
And remember that allocation percentage is entirely customizable.
It is.
You can adjust it based on your risk tolerance, your confidence in the trade,
Right.
or any other factors you deem important.
Precisely.
I love the flexibility.
Yeah.
But what about those tiny trades that barely make a difference to our portfolio?
Right.
I'm guessing we don't want to waste time and transaction fees on those.
You're absolutely right.
Okay.
That's why we have our minimum trade size, setting a floor for the value of our trades.
Right.
It's about being efficient and making sure our trades are meaningful.
Smart. Now we're getting into advanced share sizing considerations.
Okay.
What are we adding to our calculations to make them even more sophisticated?
We're incorporating the average volume of the stock into the equation. It's about understanding market dynamics and managing risk, specifically something called slippage.
Slippage. That's the difference between the expected price of a trade and the price at which it actually executes.
Exactly.
We talked about how this can be a problem in low-volume stocks, where our trades can move the market against us.
Exactly. So we're going to calculate two potential buy-share quantities.
Okay.
One based on our equity allocation and one based on the average volume of the stock over the past 10 bars.
Okay.
Then we'll choose the smaller of the two.
So it's like we're being cautious and strategic.
We are.
Making sure we're not taking on too much risk by buying too much of a thinly traded stock.
Right.
We're balancing our desire for profit with the realities of the market.
Precisely.
Yeah.
We'll also need to consider the lot size restrictions set by our broker.
Right.
We'll use the floor function to round our calculated share quantity down to the nearest whole number that aligns with those restrictions.
Okay, so we're making sure our trades are not only smart, but also executable.
Exactly.
It's all about making the system work seamlessly in the real world.
It is.
Now, how do those external files we discussed earlier come into play?
Remember how we talked about storing information like our total equity allocation percentage and minimum trade size in external files?
Yeah.
Well, this is where we leverage the power of VBA Excel to read those files and dynamically update our platform settings.
So if we want to change our trading parameters, we don't have to touch the code itself.
You don't.
We can simply update those external files and the platform will adapt on the fly.
Exactly.
That's incredibly powerful and convenient.
It is. And with our ability to manage multiple portfolios using different portfolio IDs, we can essentially run various strategies concurrently, each with its own set of parameters and risk profiles.
We've built a multitasking trading brain.
We have.
I'm blown away by what we've accomplished in this deep dive. Expert speaker.
It's been a pleasure sharing this journey with you. And remember, this is just the beginning.
Right.
You've now got the tools and the knowledge to create and manage your own custom trading system using AmiBroker.
Yeah.
Keep exploring, keep experimenting, and keep pushing the boundaries of what's possible.
Listeners, we hope you've enjoyed this deep dive into the world of AmiBroker and algorithmic trading.
Right.
Remember, the key is to keep learning, keep refining your approach, and never stop diving deep into the world of knowledge.